All right, welcome, Forex Fundamentals. We're doing common Forex mix-ups. All right, common Forex mix-ups. These are certain things that we hear from time to time from people who think they know and people who apparently know. They're all in the same boat. They know nothing. All right, and when we have interactions with people and we discuss Forex or we discuss anything that's got to do with trading or the financial markets, everybody has a view and everybody has an opinion. I never say to block out views and block out opinions, but you have to pick and choose what you take from people, because there's so many people out there who talk the talk but do not walk the walk. What makes me have to listen or take on board their advice? One thing you'll learn about trading is that it is an independent person's game. All right, there's so many people with so many different views. Why is their view any better than yours? Why is their assessment any better than yours? Why is it what they say is correct and accurate and yours isn't? So in this particular topic here at the moment, we're going to be looking at those main common Forex mix-ups, the questions that most new guys ask, and some guys that have been around for a while. They ask these questions because they want answers to certain things, and the only way they're going to get them is by asking. Some people know, some people don't. Let's clear that stuff up for you right now. So what we'll be looking at in this topic is Forex trading myths. So there's a few myths there. Some people talk about specific things that aren't accurate, and we need to outline those so we don't get caught up with them. And all we want to do is focus on trading. Forex trading facts, and then we'll have a look at the 6 main Forex mix-ups. All right, the things that people are confused about, and we will clear them up. And these are the main ones. We can talk. There's probably hundreds out there. I could probably rattle off 50 different mix-ups that people, based on my time, experience, and knowledge, and the interactions I've had with people, I could rattle off a big list. But these are the main ones. These are the ones that we need to know, because based on research, based on what people ask, these are the main ones. So we need to clear them up. All right, what is a common Forex mix-up? So there is a lot of conflicting advice in the Forex market, and that comes from people who are professional, people who are not, people who are amateur, people who started yesterday, people who have been around for 4 years and still not profitable. It comes from everyone, right? That makes it difficult for us as traders to know what is real and what is a misconception. Both novice, amateur traders and veteran traders all fall victim to these mix-ups. All right, so just because you've been around for a while, sometimes we still fall victim to them, and we need to understand them. All right, a Forex mix-up is misinformation, leading us traders to believe that something isn't true. And how do we know it is or isn't? Is obviously one, we need to do our own research, maybe find multiple resources that speak the same thing, or speak to somebody that's, I guess, consistently profitable. You know, you can't take advice about buying property from somebody that's in debt, right? You want to take advice about buying property from somebody that's got a good portfolio. Same with when it comes to trading, all right? Most guys that know what they're doing, professional traders, will have the answers, and it's all about asking those questions. All right, 6 main common Forex mix-ups. Forex is a standardized exchange. All right, so this means that there's one place that we conduct all our transactions through, and people try and say that that's exactly what it's like and compare it to the stock market. It's actually very, very different. We do not have a standardized exchange, and we're going to get through to those things when we get to the actual topics themselves. There is only one way to trade. There is only one way to trade. I've heard that a million times. No, this is my way, and this is the way it's done. We'll look into that and understand why that is not true. Larger leverage is larger returns. I've had people come in and want to trade with extreme leverage, 1 to 500. Don't realize that the higher the leverage, the worse off you can be. Forex trading is a way to get rich quick. Don't look at the Lambos, don't look at the Ferraris, don't look at the mansions, don't look at all that stuff that people post online. Half the stuff that people post online anyway is all a facade. It's fake. It's there to lure you in. They're probably trying to sell you a product, or probably just trying to make people or give people a perception of, you know, their false successful life. Forex trading is not a way to get rich quick, and if you have that mentality, you will lose very quickly. All right, and I'll explain to you why. And when you do the course and you look at all the other topics, you'll understand that what we do is systematic anyway. There are opportunities that we can take which really allow us to capitalize, and those opportunities come every now and then if we understand what's happening. But from time to time, or on a day-to-day basis, I should say, what we do requires us to grind. It's a job. What we're doing here is a job. The only difference is I don't have to go talk to a boss. I can do it from anywhere I want in the world, and I'm relaxed in my own home office doing what I need to do. All right, and I can relax at my own pace and trade at my own pace. So that's the beautiful thing about what we do. More is better. We'll get to know what that means in a sec. And complex strategies outperform the simple ones. Right? Some people come to me and say, man, I've got this strategy and we've got to add this, and this, and this. And they've got about 7 different indicators on their screen. I don't need 7 different indicators. That's going to confuse me. One indicator tells me this, another indicator tells me, what if one indicator is in an overbought and the other one isn't, and it's slowly getting there? I can't be in an environment where I have conflicting bits of information coming from multiple indicators and then trying to piece this puzzle. Go back 15, 20 years ago, even longer, they didn't have all of these indicators. They didn't have extremely complex strategies. Strategies were based on price action, price going up, price going down, combinations of candles, patterns that are formed. Why has that changed today? It hasn't. Price is still doing the same thing, right? So just because you've got a platform that's got a million different indicators on it, it does not mean you need to use them all. And you guys will get to know with the strategies that I've got. I use I'm very clean and clear with my charts. It's simple, it's easy to read. You're not going to look at it and get confused. You got one indicator for one thing, another indicator for another, and about a maximum of 3 indicators. Some are created through me, myself, and then there's a 1 or 2 there that are used stock standard from the platforms that we've got. Let's take a look and break these down and understand them. All right, standardized, exchange. The Forex market is an over-the-counter market, OTC. Right, you may have seen this or heard about OTC before. OTC is a decentralized venue that facilitates the trades of its participants. Right, so we don't have clearing houses. We don't have places where we put our trades on. They wait to get executed because some guy standing there having a look at whether there's an availability for me to buy or to sell. Right, there's that many market participants around the world that equates to or adds to $6.6 trillion worth of transactions that occur in one day. There's always going to be a moment where you get in, and there's always going to be a moment where you can get out. You're never stuck in a position. And because there are so many different financial centers around the world, we do not have one specific or particular area where our trades get facilitated through. We have a platform. We have access to the markets via that platform from our broker, and then we place our trade. Our broker is then tied in with liquidity providers. These liquidity providers then allow us to trade, and it's a simple process. All we need to do is place that trade. Liquidity providers, known as dealers, act as market makers, quoting prices in which they will buy or sell a specific currency. So when we look at our platforms, we see bid and ask prices. This is determined by our big banks, the liquidity providers, and we have no control or say over that. That's passed down to the brokers, passed down to us, and we at that point then have to either buy or sell based on what we are told. Traders and investors then place orders. That's us. We place orders on the market and have trades executed accordingly. So whether it's a pending order or a market execution, we place those trades in. When they hit those predetermined prices or areas or levels, they will execute automatically. Forex has no physical base of operations, which means regulatory bodies function largely as regional entities. So we are not governed or controlled by anyone specifically. Countries have their own regulatory bodies. Like in Australia, we've got ASIC, for example. They've got their own rules and regulations on how to conduct business or how we should be trading and how the broker should be dealing with us. But in terms of executing our positions, we don't have any regulatory bodies or any physical base of operations where somebody makes a decision on whether we can get in or out of a trade. Get rich quick. I've heard this over and over and over. So many people come in and say, all I want to do is just make money. Fantastic. We all want to make money, right? However, have you thought about what it would be like if you lost money? Because you're never guaranteed to make money in this game, right? Anyone that says this is a get rich quick scheme, or this is the only way you're going to make money very quick, somebody doesn't understand what they're doing. The guys that are making bulk cash, the guys that are making a lot of money, have large accounts, right? When you've got a large account and you risk a percentage of that account, your returns are going to be quite big. It's a simple mathematical equation. There's no tricks there. Those that have small accounts, their returns are going to be quite small, right? So you've got to understand that what we do here requires us to be patient, requires us to understand that it's going to be a daily grind, and requires us to understand that what we do is a job. This is a job, right? We are trading, we are making money. Not every opportunity is going to be there for us to take, and not every opportunity is going to be an opportunity. So you're not going to be able to jump on every single trade. What you need to understand is that as we find opportunities and we assess, if they fit, they fit. If they don't, they don't. Expect there to be losses. You're not going to win 100% of the time. The financial rewards of Forex trading attract an abundance of new participants to the marketplace. A lot of guys online look at my car, look at my mansion, look at my lifestyle, yet have nothing else to show other than that image. I can go out and get images like that. Very easy. You can go out and get images. You can fool the world by showing people a specific lifestyle that is not real. What happens? This abundance of new participants come on because they see that and they think, oh, wow, get rich quick. And then they say, all I need is a strategy. Show me how to trade. They come on board. They've got no idea that psychology is number one. They've got no idea about managing risk. They've got no idea about risk reward. They've got no idea about compounding. They've got no idea about any of the above. All they think of is, that guy showed me that he's got a car that I want, and I'm on now a platform that's got an amazing strategy. I'm just going to apply that and I'm rich. And then they just risk all of their money in one hit, or a large portion of it. You're better off going to the casino if you want to do that. Readily available leverage, small margins, extensive market hours, and a wealth of trading options are a few attributes that promote easy money. So all of these guys say, hey, listen, leverage is great. Leverage is going to give you big returns. Do you know what? Small margins, you don't even have to pay that much, right? You come in, open up an account for $200 and you can be rich. Well, hold on a second. Have you got something to show me that proves that? Because that's a lie. That's not how it works, all right? 24 hours a day, 5 days a week. Yes, it's fantastic. Absolutely, don't get me wrong. But there's also a negative side to an extensive market hours. When do I trade? At what time should I trade? How long should I be trading for? Come on board, 24 hours, 5 days a week. I'll show you. I don't trade 24 hours a day. It's not realistic, right? A wealth of trading options. You can buy crypto. You can buy into gold, silver. You can buy, well, okay, I can buy into all of these things, but I don't know how any of these things move. So I'm guessing that people make it sound amazing and they draw people in. If anyone's going to say to you, hey, look, it's a 24-hour market, that's one of the pros of trading Forex. And I say that on my course. This is a pro of trading Forex. Why? Because we have day-to-day commitments. I want to be able to trade around those commitments. But what I say after that is there are certain times of the day that we should be trading. Just because it's 24 hours doesn't mean that the market is available for us to trade 24 hours, because there are moments where it's quiet. There are moments where high impact economic data releases are produced. And there are certain times when it's just not good to trade, period. We need to understand that, all right? But all of these things promote easy money. And everybody comes on board with this whole concept of, man, do you know what? It sounds so amazing. If it sounds too good to be true, then guess what? It is not true, right? There's always going to be pros and there's always going to be cons. And anybody that actually knows what they're doing will actually know how to explain the pros and cons. Contrary to the popular belief, success is not 100% guaranteed, and losing capital is a daily part of doing business. We lose. I lose. You will lose. All right. I don't have 100% win rate every week. I've had weeks where I've had 100% win rates, but I don't get 100% win rate every week. There are moments when I will lose. There are moments when I'll have a full losing week. There are moments when some of us will have full losing months. If you can understand that losing is a part of doing business and know that you've got a strategy that works and understand how to apply it using the correct methods, which is all the fundamentals that you should know, then you'll accept the fact that 100% is not guaranteed. You'll accept the fact that losing capital is a daily part of doing business. Anyone here that runs or owns a business knows that they've got expenses, and they also know they've got sales. You can't run a business if your expenses outweigh your sales. What business are you running? You're not running a business then. You may as well shut down because you're going to lose anyway. Same with Forex trading. We know we're going to lose, so let's make our losers become our expenses and our winners become our sales. How do we manage that? Risk reward. Go through the risk reward topic to understand what that means. Forex trading is exactly like running a marathon. It is not a sprint. We're not here to get to the finish line very quickly. In actual fact, there is no finish line when it comes to this industry. Every day there's a new opportunity. Every week there's a new opportunity. If one opportunity is taken 3 hours one day, that same opportunity or another currency pair with a similar opportunity could take 7 days the next time, right? Just because we have experienced one thing before, it doesn't mean we're going to experience the same thing again. So when we know that, we know that what we're involved in is long-term, extremely long-term. And we need to know that it's going to take us a bit of time to get where we want. So if we know that it's a marathon, you need to have the patience for that distance. Marathon runners breathe. They don't sprint to begin with. They start off nice and easy and they pace themselves. And as they pace themselves and they get to certain checkpoints or certain areas, they start to pick it up a little bit, right? We need to understand how to maintain and control ourselves so we've got that longevity in us. There is only one way to trade. Anybody that says that has no idea how to trade, all right? It is important to realize that there is no right or wrong way to trade. I've had people come to me and say, I've done this strategy, I've got that strategy, I've seen this, I've said, fantastic. Whatever works for you, works for you. That's great. Whatever works for me, works for me. I know what I do works, and if you want to learn it, you can learn it and it will work. However, do not try and mix and match. Do not try and grab from one strategy and put it onto another, because the strategies that work, whether they're from me or somebody else, have been tested. That's why they work, right? You can't just do specific things, mix and match certain things and just make up your own strategy without back testing, forward testing, and ensuring that it works. And over a period of time, not over, 1 day or 2 days, we're talking over years. You've got to see how this particular strategy pans out. If a proven strategy is adhered to with consistency and discipline, big words here, consistency and discipline. All right, you hear me talk about discipline a lot. You need to be disciplined enough to be able to say no, enough to be able to say yes, enough to be able to say, I don't think this is a good opportunity, or yes, you know what, I'm comfortable to say based on this, and this, we're good to go. I'm disciplined enough to do what I need to do. Success in trading is attainable. All right, if you have that discipline and you're consistent and you tick all the boxes, success is attainable. There are only a handful of people that become successful in this, and that's purely because one of the traits that they have is discipline. There's multiple traits that we need, but one important one is discipline. Anyone that succeeds in anything in life has an element of discipline instilled in them. If you are undisciplined, or you don't have, or you lack the discipline, believe me, you're on the sidelines watching everybody else that is disciplined making money. This is also back to psychology again, all right? Back to the fact that you need to be in control of your own emotions. I can teach you everything you need to know, but I can't teach you how to be in control of your emotions. At the end of the day, the only correct way to trade is the way that makes money. All right. I've had people that swear black and blue that their strategy is the best. You know what? I commend them and I clap for them and I say good luck and I wish you all the best. If it works for you, it works for you. That's great. What works for me works for me. All right. So if you're out there just chasing a strategy or looking for some sort of, holy grail magic system, it doesn't exist. I've taught people how to scalp and they won't get it. I've taught people how to do some of my intraday trading strategies and they don't get it. It works for me, but it might not work for them. Pick one of the particular strategies that you have learned, apply it, practice it, give it a go, and then see if it works for you or not. Okay. A working strategy doesn't come from just, you taking and applying it. There's other things that we go through in life, day-to-day commitments that take our energy and our focus away, maybe my hours of work, maybe I've got a family at home. So I need to know what strategies work for me, because if I play the strategies in the times that I've got my full focus, then I'm going to end up becoming a lot better at that strategy. If I'm all over the place and I try to apply strategy, especially if you want to scalp and you don't have the patience to scalp, and I mean patience in terms of being able to jump in and jump out. So because patience can be waiting, but patience can also be learning how to be quick as well. Patience in terms of, jumping in, jumping out, jumping in, jumping out, waiting for that right setup, jump in, jump out. But look, there's a lot of different traits and a lot of different qualities that we should have as an individual to be order to make sure that we apply ourselves correctly. All right. Leverage is larger returns. All right. No matter how great a trading opportunity appears, know one thing: leverage is a double-edged sword. Some guys say, look, I'm going to trade with a 1 to 400 leverage. I say, no, don't do it. I've never gone that far and I never will go that far. 1 to 100 is more than enough. Right? It's manageable. We can place our strategies around it with our risk reward, our risk management, how much we're looking at risking, all of those things. And we can then still work out to be quite successful, knowing that we can still make some solid returns, but also in control of it too. I'm in control of leverage. I don't let leverage take control of me. I take control of leverage. While the thought of leverage may sound and look attractive, larger positions may mean larger gains, but can also mean larger losses. It's all fantastic and all good and well when we've got a strategy, when we've got a trade open and we're making $30 a pip. But what about when you're losing $30 a pip? No one ever thinks about the other side. Everybody thinks about how much they can make. And that's the problem. They come in with this, oh, I'm going to increase my leverage. I'm going to increase my risk. I'll be making $50 a pip. Okay, wait, well, stop. What about when you lose $50 a pip? What are you going to do? One, you're going to probably blow your account. Two, you probably have no idea how to manage it. You'll make some silly decisions and you'll probably end up over trading or making some wrong choices because you're starting to flip out because you're seeing, large amounts of money come straight out of your account. Leverage isn't great unless you're winning. So you need to know how to manage it. An unnoticed swing in price. So if price just turns around very quickly, you can blow your trading account before any expected gains are made. You can be there. Your trade is open. You're in action. Price is moving. All of a sudden, bang, it turns and goes against you. You've increased leverage. You thought you were amazing. You've done a course. You followed live sessions and you are unstoppable. You are the Forex God. You can do it. And then all of a sudden, the market turns around. You've got this amazing leverage. Instead of making $50 a pip like you were telling all your mates, you start losing $50 a pip. What do you do in that point? Well, you learn that it's probably not right or great to have large leverage and maybe come back down, humble yourself, have that leverage that's at a decent, level, 1 to 100, and then know how to manage it. Go to the fundamentals, go to the videos, watch the course, watch the live sessions, and understand how we manage our leverage. And then that way, once you manage the leverage correctly, you're not going to be losing any more than you have gone out expecting to lose. All right, and that is a designed or fixed portion of the account that we're losing in terms of percentage, the account that we're trading with. Complex strategies. The relative complexity of a trading strategy has very little to do with its eventual effectiveness. In my opinion, the more complex the strategy is, the more complex it's going to be for you to apply, and the more harder it is going to be trying to extract money out of the market. Keep it simple. Keep it easy. Why does it need to be complex? Because somebody told you about all of these amazing tools that you can put on. Why do you put them on? So if somebody walks behind your screen when you're somewhere, they can go, oh, look, this guy knows what he's doing. Look at all the colorful lines on his screen. Who cares about the colorful lines and what people think? How can you make money out of the market using the absolute minimum required? Profitability in Forex trading stems from interacting with the market efficiently. I don't want to come in and have some sort of complex system which allows me to not be able to interact with the market efficiently. I need efficient interaction with the market. I need to make sure that I can read and see what's going on, because if I can read and see what's going on, then the market's going to interact with me efficiently, and it's going to give me what I want. But I start to confuse myself when I place too many indicators. I have an extremely complex strategy, and you actually start to think about, if somebody offers you some sort of extremely complex strategy, and I've seen this before, they say, oh, come, I'm going to teach you how to trade, right? When they teach you how to trade, they give you this crazy complex strategy that probably he or she doesn't even know, right? And then you come and you apply it, and it doesn't work, right? And when it doesn't work, what happens? You go, man, this is so difficult. That person that's taught you that probably not making money either. But it was a way to lure you in. And it's a way for them to go, do you know what? It works for me. Why isn't it working for you? The only way to combat that is to actually see the person do it live. When you see the person do it live and they trade the same way that they teach, different story. But then again, a complex strategy, what for? This shouldn't be hard. This shouldn't require us to, have so much brain power invested, right? All it needs is for us to know how to enter, how to exit, certain things that we look for. We tick all the boxes, and we should place our levels, bang, jump in. Nice and simple. If we overcomplicate it, we're not going to make the right decisions or right choices. Access to the market with minimal fees, applying structured money management, control of emotions, consistent risk reward, trading with the trend, and having a plan of attack makes it sound difficult. All of these things here make what we do sound extremely difficult. But if we break them down one step at a time and understand each one of them individually, you will end up building that foundation, which will then in turn make it easy. All right. Anyone in this world that goes through any sort of education, whether it's, aiming to be a doctor, a lawyer, or an engineer, whatever it may be, we could throw every single thing that they need to know in one paragraph, and they'll go, well, you know what? I don't see myself doing that. Same here. But once you go through the course and you break it down over the period of time that's required for you to complete it, all of these things become simple, become easy to understand, and you've built that foundation. So don't try and take a lot of things on board at once and then try and decipher it one step at a time. All right. Simple strategy, simple topics. Everything within these topics is going to be simple to understand. Take it one step at a time. Do not be deterred, and do not be forced to believe that you need to be some sort of guru. I've got guys that come on board and they'll learn, and some of them very, very new. Within a few weeks, they're making their own trades and making their own money. Great. Others take a little bit more time. All right. Everyone's different. But I don't trade complex strategies at all. When you guys go through the topics and the course itself, you'll see how simple the Forex trading strategies are. If these elements are in place, even the simplest trading plan can prove successful. That's what I said. When you learn the fundamentals and you build that foundation, simplest trading plans, the ones that I show you, are going to be successful if you know how to do all of these. So you don't need to have some sort of crazy complex strategy and then complicate your thought process with all of this as well. This is the hard stuff. Once you can manage the hard stuff, the trading plan should be easy. More is better. More is better. Keep trading, guys. Let's get so many trades. Let's do 50 trades this week. With so many options, opportunities seem endless. In most cases, the opposite is true. I used to be in a position many, many years ago where I would take 100, 150 trades a month, right? And let's just give a fake number or a number for the sake of this exercise. And by the end of the month, I'd make $10,000, for example. I started to realize that I could actually take 30 trades for the month and still have the same outcome and not have a bad win rate and not go through the emotions of losing so much. I've pulled myself back. I've waited for quality over quantity. And what I've done is I've only taken those solid trades. More does not mean better. More just means you're going to be in a emotional roller coaster longer than others. Let's get in, take our money, get out, wait for the right setup, repeat that process. The longer one stays in the market, the greater the chance of falling victim to many pitfalls. All right, have your setup ready to go. Place the trade, watch and monitor the trade. If you can get out because there's something that's occurring and you need to close it, get out. If it's going to hit the TP, take it. Don't try and chase. Even trailing stop losses and trying to achieve ridiculous risk reward, it's not going to work. All right, you're not ever guaranteed to go that far. If you can plot in your setup, take what you can out of it and get out, obviously maintaining a risk reward. Don't just jump in and then 3 minutes later close your trade and take it out. That's not what I'm saying. Have your plan, your assessment's right. Let your plan and your assessment play out and then repeat that process. And if you can do that process 5-6 times a week, obviously if the opportunities are there, fantastic. But if you're going to be doing it 30-40 times a week, I'll tell you what, out of those 30-40 times, you're going to have a lot more losses than you have wins. I'd rather take 10 trades in the week and have 8 wins than take 30 losses in a week and have 30 trades in a week and have 10 wins there. It's the same outcome at the end, except I now got to overcome more. So what do? I got to go and repeat that process again the following week and have hopefully make more winners than I do losers. It's too stressful, way too stressful. A few solid trades per week is all you need. Overtrading, lapses, indiscipline, systemic risk and fatigue can all destroy profitability. So make sure you don't overtrade. Overtrade comes from thinking that you are so good at what you do that you put more trades on, or losing and then placing more trades on to overcome. You start to overtrade. Lapses, indiscipline, we all go there. We've all had moments where we go, oh, I'll just cut the corner here, I'll just do that. No way in the world should you do that, because as soon as you drop your guard, that market's going to swipe you out. It's going to take your money. It's going to cost you for a lesson. All right, don't be taught a lesson using your real money. Fatigue can all destroy profitability. If you're tired, if there's something happening, if you're not risking the right amount each time, you've got to make sure that you stick to those rules. If you're not all there emotionally and psychologically, your mindset's not on point, just have a break, have a day off, have 2 days off, have a week off. Right, it's only going to benefit you. All right, so the things to take away from this are obviously what we've discussed is some of these misconceptions, some of these specific quotes or statements that are made are not true, are not real. All right, there's so many out there that we can talk about. The main ones that we've discussed here are important to us in terms of building our base, our fundamentals up. All right, have that solid foundation. Make sure you're not deterred by what people think. Make sure you understand that you don't have to trade every day, all day of the week and have 30-40 trades a week. All right, you don't need to have large leverage in order to make returns. All right, you don't need to come into this and expect that you're going to be some sort of millionaire overnight. You've got to be realistic. All right, all of these things, if you see, they come from nothing other than the psychological aspect. All right, everything else is written down. Your strategy is written down, your risks is written, but your psychological side of it's not. And if you're not 100% in check with your own mindset, somebody comes in and says, hey man, you should trade like this, or that's not real, or hey, I've got this cool strategy that works. It's quite difficult, but you know, or actually this is the only strategy that works. Believe me, I know, I've seen it. At least at that point you go, well, no, hold on a second. That's not true, because there's many people that make money from the markets many different ways. It's what works for that person. All right. So hopefully we've learned a few things here, guys. This is obviously all adding to what we've got with our course and our other live workshops that come up, but this is all good knowledge. This is all good information, and this is all going to assist with you building your own solid foundation.